as we join you this Tuesday evening here at DatelineDrought.com. Our report is brought to you by Genuity Drought Guard Hybrids. Well, there continues to be quite a bit of talk about what's happening in America's ethanol industry, as this economic pinch has become quite severe due to the elevated corn price for those producers of ethanol, and at the same time, the fact that we're driving less in America and the demand for fuel is down, and so is the demand and the price of that ethanol. The Energy Information Administration estimated that in the most recent week, last week, the per-day production of ethanol was about 821,000 barrels. Now, that was down about 36,000 barrels, down about 4%, actually, to the lowest level in about 2 years, according to the Energy Information Administration. And the Reuters News Service, to give you an idea of how much money is being lost here by the ethanol industry, Reuters estimated that the loss is running about 32 cents a gallon for Illinois producers right now. So if there's a plant near you where it appears not much is going on, that may very well be the case. At least 2 plants have been closed in Nebraska. One, we know, has been shut down for the time being in west central Indiana, as the industry remains under pressure. The Secretary of Agriculture, Tom Vilsack, has said there are no plans to change the renewable fuels standard as it is currently set. I have been asked, though, in recent days by not just farmers but some other friends who are agriculture journalists, do you think Washington would mess with that? And what about exports? Many of us get chills up and down our spine thinking about the possibility that this government might embargo the shipments of grain from the United States. We remember the cost that it has had for our growers in the past. All you have to do, if you're old enough to remember, is recall January 4th of 1980. It was a Friday, as I remember. I do remember it vividly, seeing the stories come across the wire, how then President Jimmy Carter embargoed our grain sales to the old Soviet Union. That nation that spanned a dozen time zones had invaded Afghanistan. And Secretary of Agriculture Bob Bergland just happened to be in the wrong place at the wrong time, as President Jimmy Carter made the decision that we would stop our grain sales to the Soviet Union. We would punish the Soviets for their invasion of Afghanistan. We wouldn't send our athletes to the Winter Olympic Games. That would fix them. And we would stop selling them grain. Well, the effect of that was it had far more impact on U.S. producers, as our share of the market with the old Soviet Union went from 65% to 0 immediately. It took us years to recover from that, and hopefully we've learned our lessons about embargoing our shipments to our great customers overseas who buy our products. We'll see. Bryce Knorr watches these markets on a daily basis. Bryce is standing by to report to you this evening. Bryce?
Hello, this is Bryce Knorr, Senior Editor of Farm Futures Magazine, with a special Dateline Drought market update for Tuesday, July 17, 2012. If the grain market was run by an airline, the captain would have kept the fasten seatbelts light on today for pretty much the entire flight. It was a bumpy ride to be sure, but prices, for the most part, reached their destination safely without major damage. The market raced higher when trading restarted late yesterday afternoon, with corn and soybeans posting new contract highs after a sharp drop in weekly crop ratings. However, when futures failed to take out all-time highs on nearby charts, Asian traders took profits, weakness that spilled over into the start of the European session as well. U.S. traders jumped in to buy the break, rallying prices mid-morning when more selling kicked in. Futures finally closed mixed. September corn rose 2 3/4, but December was off 1 1/4. August beans gained 5 1/4, while November was unchanged. September wheat was up 8 1/2 cents in Kansas City, 1/2 cent in Chicago, and 2 3/4 in Minneapolis. Some traders blamed weather forecasts for the turbulence. A front working through the northern reaches of the Corn Belt today will slowly move through the region over the next couple days. Southern Wisconsin and the eastern Corn Belt have the best chances for rain, but much of Illinois and Iowa should receive fairly light coverage, while western fields stay dry completely. 2-week maps continue to show chances for rain too, but those haven't proven very accurate lately. Wheat prices also firmed today. In addition to following corn, lower production in the former Soviet Union could boost U.S. export hopes. End users aren't jumping in to buy yet, however, as Jordan canceled yet another tender in the face of rising prices. Keep up with the drought situation across the country by visiting www.datelinedrought.com.